Good morning or good afternoon, everyone, depending on where you're joining us from. I'm Lucy Cohen-Blatter. I am editorial director for custom content at Mansion Global and Dow Jones. And I wanted just to thank you all for joining us today to discuss the agency red paper, which was released just yesterday. Today's panelists are all experts who are featured in the report. And we're going to be getting a little bit more in-depth information from them. The report covers luxury lifestyle, luxury real estate, as well as some of the issues facing the larger economic landscape. I'm going to have our panelists, Mauricio, Graham, Arushi, and Sebastian, introduce themselves in a little bit. But before we do that, just wanted to give you a quick rundown for those of you who haven't been able to read the report just yet, just to give you a little bit of information about what's in there. So the look back into 2024 really explores how the luxury housing market seems to have outpaced the general market. And that's something we'll be speaking to Mauricio about a bit in a little bit. It seems that looking into 2025, you're probably going to see a little bit more sales activity and more listing activities, some of that having to do with some political certainty that we are seeing. The report also looks at real estate hotspots around the globe and how high-end buyers are sort of diversifying where they're willing to live. Of course, AI is a topic that is explored a lot in there, which is something I know that's on my mind and on a lot of others. We'll talk to our panelists about that. And there's also a lot of exploration into younger buyers. So there are some really interesting statistics about the wealth transfer that's happening right now. And we're going to look at how that's affecting real estate and luxury living. There's also a lot of conversation about Golden Visa investment program, which is sunsetting in a lot of the world. And we also explored some pretty interesting amenities, one of which is longevity. I thought that was particularly interesting to read about. So we'll discuss some of these things, but everything obviously is in the red paper too. And I'm just going to turn things over to our panelists. And we can start maybe with you, Mauricio. I'm sure everybody here knows who you are, but if you don't mind just introducing yourself.
Hi, everybody. Well, first of all, thank you so much. And it's such a pleasure to be here. It's such an exciting thing to be able to put out this red paper every single year. It's something that we at the agency really care about. It's just, it's a fun read. It's extremely informative. And I want to thank you and all of the collaborative people that have worked so hard to put this out here, to put this out. It's just an amazing paper. I'm Mauricio Umansky. I'm CEO and founder of the agency, and I'm so proud to have been joined by our great panelists today and to have this discussion on what's going on. I'm looking forward to diving in with all of you guys today. But welcome and thank you for joining us.
Arushi, can you go next? Oh, Arushi, you're just muted.
You're muted.
Oh, oops. Hi, I'm Arushi Kapoor. I'm the founder of the Agency Art House and the newest addition to the expansion of the agency family. I'm very excited to be here. I am an art advisor, and we help clients purchase and sell alternative assets, specifically art. I'm really excited for the red paper. This is the first time I'm featured in it. I read through it. I was one of the lucky ones that read through it right before I was released. And I honestly, like, one of the biggest things with even the agency art house that we're trying to do is provide education onto how to build value and collect art as an alternative asset. And like the red paper is a fabulous resource. And I highly, highly encourage anyone who is in any of the luxury markets to go through it. It's a lot of information for your clients, for our clients, for all luxury clients, that you can give to them and provide them that extra service and extra education. And education is the most important thing. So I'm excited to be here and I'm excited to talk to everyone.
Thank you. Sebastian?
Yeah, hi, my name's Sebastian Duthie. Thanks for inviting me on. I run a company called Art Market Research. We're an index provider. We've been around a very long time, since the 1970s, in fact. And we provide data on a wide range of sectors, so art as well as luxury and collectibles. Our clients generally are from the valuations side of the business. We are used by tax agencies to calculate changes in value for open market value, but also we provide insights for reports, particularly wealth reports, and for a long time provided insights for the Knight Frank Luxury Index. Well, thanks for having me on. I look forward to joining in the discussion. Things have been changing a lot over the last few years, and they change at pace. So it's always interesting to check in and keep talking about it.
Excellent. So, as I said earlier, if anyone has any questions, we're going to save a little bit of time at the end of the conversation, but feel free to post those questions in the chat and we'll try to get to as many as we can. So, first up, I want to address Mauricio. I have a question for you. Um,
Ah, I'm ready
the
for you. I'm always ready for you.
Good, good. The red paper found that, there's despite economic challenges, the luxury real estate market really does seem to be holding its own. As an example, in the market report, it says that the gap between overall and luxury time on the market is the smallest it's ever been in the past 4 years. Um, as the overall housing market has slowed and the luxury market kept its strength. I just would love to hear what you're seeing, and whether you think that that is true from a sort of anecdotal basis.
Yeah, where the trend will go and all of that stuff. So first of all, I want to make sure that everybody understands that we're defining. This is the red paper. It's a global paper, and it's a national paper, right? So we're looking at real estate, not in a micro level, but at a macro level. And so I think it's important to understand that when we're discussing luxury real estate, we're discussing homes that are priced above $1 million. Versus the overall market, which is under $1 million. We're not talking about the ultra high net worth luxury, 10 million plus, 20 million plus, which I can also address in a minute. But the report talks about that. And one of the things that we're seeing is a little bit more resilience in the market. It has outperformed the general market by quite a bit. We're seeing a lot more buyers buying. I mean, they can afford, typically you can afford a little bit higher interest rate. You can afford to make moves. We have seen an increase in inventory, which has allowed buyers to enter into the market. And keep in mind, guys, that we're coming off of an extraordinarily low year in 2023. And it would have been really, really bad if we would have had the same year in 2024, because 2023 was one of the worst years in terms of transactions ever. I think it was all the way, you go back all the way to 1991 to see the last time we had, a year that was that like 2023. So we definitely started to see a little bit of an outpacing of the market, an increase in the market. We're expecting, we've seen more of the supply get unlocked. And as you start unlocking the supply, you will see more purchases enter the market. So that's been really, really nice. The interest rate drops, starts unlocking supply, and I think that that's kind of a super important thing, moving forward into 2025 with our new government. We're expecting to see more interest rate drops. So I got to tell you guys, if you guys are buyers out there today, and you're thinking about buying and you're waiting for deals, like now is the time. There are deals out there to be had. I think that's the most important message. I mean, I can tell you even personally, I have been buying homes and doing a couple of spec homes personally. So I'm putting my money where my mouth is. I'm not just telling you guys all that. And I do perceive that we're going to start seeing an increase in pricing, at some point in 2025, maybe into 2026. But right now, there are deals to be had. So if you're a buyer, go out there and do it, and go make some offers and have a ton of fun.
And the changes to the interest rates, they've been incremental, right? They've been quite small so far. Do you get the sense that even in the luxury market, that even just a tiny change can sort of change people's mood or their outlook?
Yes, there's no question about it. Even a small change can change your outlook because it becomes a trend of where things are going. Okay.
Mhm.
From my perspective, when I look like at investing in real estate, there's two things I look like. One of is affordability, and then the other one is price and value. Okay. To me, the latter, the value, is more important. I mean, obviously, you need to be able to afford it, but it's more important than the affordability aspect. And why I say that is because if I'm investing or buying, I'd rather buy low and maybe pay a little bit more on the interest. And as those interest rates drop, I can always refinance and continue to drop my payment so that I can become more affordable and have more money and unlock more money for the next one. But the appreciation curve, if you hit it and you nail it, that's where you really start creating wealth and long-term, wealth. So I look at value more than I look when I'm investing, than I look at, I'll stretch in terms of what I can afford in order to make a purchase that makes a lot of sense for me. So I'm analyzing value first. That's my primary thing.
Great. I'm glad to hear that as somebody who did just that and bought a house this year.
There you go,
Um,
Lucy.
so I wanted to ask you, Arushi. So COVID was a crazy time for the art market. We all know crazy numbers we saw across the board almost. Can you tell us a little bit about where things stand now and if you're still seeing the the most luxury purchases being in a little bit of a bubble?
Absolutely. So COVID was a very interesting and unique time in the art world in general, if we look at it historically, right? There were so many changes that happened. People were at home more. There were not too many places that they could spend money on, especially in the lower ends of the market and the under $100,000 artwork market. So we saw those prices soar a lot. A lot of the emerging artists, when we looked at them in auctions, the prices went up by a lot. And the auction houses during the pandemic, auction houses and a lot of the online resources for art really soared because people were sitting at home. You couldn't go to galleries, you couldn't go out to exhibitions. So during the pandemic, it was a very unique time period where I wouldn't say the blue chip, but pre-emerging market and the mid-career artist market was doing really, really well. Um, and we saw that change as we got into 2023, 2024, right after the pandemic was ending. What happened was that people were realizing that a lot of that market was a bubble and was going up. During this time period, still the blue chip market, which was the higher end market, was doing okay. They were doing fine, but like I feel like after, and from the numbers that we saw from fairs and all of that, after COVID was exiting and we were getting into the 2023, 2024, people were becoming more cautious. So there was a major market correction. And when I say market correction, that means that during COVID, the bubble was a real bubble. Like the artist prices were not really what they were showing in auctions and stuff like that. And after in 2023, 2024, we saw a major slowdown in people purchasing art. Again, in the luxury market, it was a little different because the good art pieces in the luxury market were still moving, but you were able to get some really, really good deals because it was a buyer's market. It wasn't a seller's market. Now, what we are seeing is we're in this time period, specifically in the last 2, 3 months, we've seen the market going into a more optimistic direction. What that means is that like the last auctions, Art Basel that was last week, and Mauricio and I were on the ground there. We saw that the people are more interested in purchasing artworks. Again, specifically in the blue chip market, the under $100,000 market, which is typically a riskier investment, has gone back to its pre-pandemic stages where that market isn't really doing very well. In the luxury market, we are seeing two different types of luxury assets. Assets that are more conservatively priced, that are still being purchased. That means that they are still priced significantly lower than what the top market cap for those luxury assets could be.
Mm.
Those artworks are being sold. They're still A-plus artworks. And then there are artworks that are higher price points that are still not achieving those higher price points at these things. But the trend that we are seeing right now from the auctions and the art fair sales and all of our sales is that we are in a really great time period right now to get some absolutely amazing deals where there is potential for those assets to go up significantly in the next couple of months to a year. I think in the next year we're going to see the art market, and the art market, like all of the other luxury markets, goes in a cycle as well. And we're going to see this market cycle go and boom as the economy is doing better. And if we look at all of the financial markets and fiscal markets in general, we've seen that the markets are going up, even though there are still there are expectations of interest rates maybe coming down in the future in the next year a little bit. All of those things definitely affect the art market as well. So I think this is a very fun, unique time period that comes in every cycle, where if you are purchasing art right now, you are in a really good position because you have a lot of upside to your investment from an alternative investment point of view. And you still have access to artworks that are those A-plus artworks that will give you the maximum amount of return. As the market becomes more competitive going into the next year, it's going to be very hard to get those artworks, and the margin for those maximum returns is going to become smaller and smaller until the market reaches its peak. And normally that lasts for at least a year and a half, 2 years historically. So I think for people that are savvy buyers and for agents that are watching that want to give their clients that extra level of service, I would highly tell them to recommend these assets right now, whether it be real estate, whether it be art. And art and real estate are very similar assets in terms of investment. So like, I think this is a very good, interesting time period for people to jump in and make the most of where we are in our current situation.
Right. Sebastian, anything you want to add to that from your perspective?
Yes, I mean, I don't know where it's going to go, but I think that what we have seen recently is we've seen a lot of younger buyers come to the market. We can see that they are very discerning in what they're buying. So if you think the kind of the online revolution in terms of auction buying really went into sort of acceleration during the pandemic. It's not just about learning about the artwork, it's about learning the world around it. There's all sorts of resources. So the scholarship has gone up, and so this sort of discernment curve's going up. And I think that the new generation are not buying the same things that their parents were buying. After all, their reference for luxury, say from cars to watches, is the sort of 1980s and 1990s. And so that's a whole different set. So we're looking at cars, for example, the young timers are what they're calling young timers. So these are cars from the 80s are more interesting to them. And so that's where the interest has gone. Look at watches. This month there was a Daytona watch, Rolex Daytona from the 1990s, which they're now calling an era neo vintage. It's even got its own name now. And that went for over 5 million Swiss francs. And I mean, that is unprecedented for a watch of that era. So, there are some big shifts happening right now. And I think when you look at the art market, there are people buying. They're not necessarily buying what auctioneers and dealers are used to people buying. They're looking for something that speaks to them, and I think that certainly there's been lots of talk on the primary market about personalization and things like that. People want something that they can relate to. Um, from the auction houses and the dealers, it's very difficult for them to keep up with these changes. They, have ways of doing business, and they have relationships with artists and artists' estates, and that's where their interest is. And auction houses are perhaps the most pragmatic businesses of all. They're in the business of bringing buyers and sellers together, and they're very good at adapting and changing quickly. But I mean, the pace of change is so fast. We've seen them, struggle to keep up. I mean, today we saw Sotheby's laid off 100 staff. Christie's have been laying off staff recently. And I'm sure we'll come on to AI, but, there's all sorts of different ways that AI can actually, help customers find what they need, and so things are changing rapidly. So in terms of where we are on the curve, I mean, I think that it's been a tough ride for the blue chip artworks. I think that certainly we're looking at prices, average values pre-pandemic. So we're back to kind of 2019 average values if you look as a whole. Modern and contemporary has really taken the worst hit. People are passing things if they're not priced correctly. Impressionists, they're probably fared slightly better. They're obviously the original innovators, and they're a reliable buy. But I think that's indicative of, people playing it a bit safe at the moment. But absolutely, in those terms, it is a buyer's market. There was a very important sale middle of last year, Gerald Feinberg sale auction, and coming off the back of a very kind of bullish market in 2022. There were no auction guarantees for it. And actually, it turned out to be a big flop. It was well below the estimate. And I think that was a sort of pivotal moment. People started realizing that this confidence had shifted, and there were real opportunities now.
Yeah, there's a question in here, actually. You mentioned Sotheby's, but Bonhams as well announced large layoffs, which I wasn't aware of that, but I'm sure you guys are. So that does seem, and you think that's in part has something to do with AI. We'll get to AI later, but Sebastian,
Well, technology. I mean, we were talking about, Rishi was talking about during the pandemic. I mean, I think it's true. I think people had time on their hands. People came to auctions, they'd never been to an auction before. I mean, there's a certain learning curve to actually, getting your head around an auction and building up the confidence to actually bid. And I think that a lot of those prices were people actually clicking a lot, and they might have not made the last click, but they were certainly pushing prices up. So, I mean, we've seen those big changes. We've seen the offering from the auction houses and the dealers, very sophisticated offerings now, so that you don't have to see things in person in the same way as you did. There's regular $1 million sales where there wasn't before the pandemic. And so, there's been a big shift. Then you're looking at it used to be that you would have, pretty regional sales. So you would have online sales, which were the lower value ones. But I mean, the last 3 or 4 years, auction houses have been having live sales and encouraging international bidding. Obviously, they want competition, but it means that people are buying from all over the world, and so things are shifting very quickly. And the big auction houses and the big international dealers are well placed to move art to where it needs to be. But as soon as the trends change, then you have to adapt. And I think that, although auction houses are very good at it, they're large, organizations, and you can't put a foot wrong. And so, they're having to cut the risks.
I can also add to that, actually, from another perspective. And I think what's also happening is that we are going through, and as the art, this is in terms of organization of the art world, we are going through a shift in the art world where a lot of the top art dealers that are struggling, I wouldn't say struggling exactly, but that are struggling to adapt specifically, are art dealers that are in the older older age ranges. If you look at when the top 200 collectors that are currently the top 200 collectors were developed, they were developed by this generation of art dealers that are mostly in the 70 to 90 age group. And I think now in the last 25, 30 years, the world has changed a lot, where the new generation of art dealers that are being developed want more transparency. They want information. They want to know all of the details of the artworks. They want to understand how to purchase an artwork. And they want their art advisors to not only be a broker, but also to be a guide, to also teach them why certain things are valued, how they are valued, and dwell into a lot more information than the expectations were previously. So in terms of a lot of these layoffs specifically, I think that also goes into how the auction houses have been structured. And they are restructuring themselves according to the new needs of what the art market is going to be going into. You know, there needs to be transparency, there needs to be education, there needs to be after sale service. You have to provide your clients all the services that go not only services of purchasing and selling artworks, but also the after sales purchases of structuring their entire art collection, or connecting them with the right lawyers, or connecting them with the right people in the insurance industry, to provide a lot more trust. And while we are seeing this thing restructure, and I will say, like, the older generation of the top art dealers wanted to outlive the next generation, and they did. And we actually come in from the generation after that, where information is very important. So I think we're going into a new era of the art world, where we're actually going to see a whole new generation of collectors come into play, that have made their fortunes in finance, that have made their fortunes in AI, that have made their fortunes in tech. And I think when Sebastian is talking about the new, more discerning collectors that are learning to collect and spending money on collections and new types of artwork collections and all of that, that's something very important to note. And that actually goes into why there's a major restructuring in the auction houses, because of course the auction houses is a pillar in the art world, and them changing their structuring is coming from all of the changes that are expected to come from the art world in the next couple of years.
Yeah, and Julio put in here a note about the article in WSJ. Thank you, Julio, for picking a WSJ story specifically, which gives some more information about the Sotheby's layoffs. So one interesting thing I just wanted to mention was I was reading a Business of Fashion report yesterday, and they were saying that there's all this talk about the younger buyer, and while the younger buyer is important, companies can't focus entirely on them, and they have to find some sort of balance, and they're a little bit drawing their attention to the silver generation, as they call them. So I thought that was an interesting sort of trend to look at too. But I do want to talk about the wealth transfer. So there's some really interesting, I have to share this with you all. It's in the market report, but I thought it was staggering. So there's an estimated $31 trillion expected to be transferred over the next decade by 1.2 million people, each with a net worth of at least $5 million. This is according to the London-based data firm Altrata. 2/3 of that wealth, or nearly $20 trillion, is anticipated to be passed on by just 155,000 individuals. Altrata found that most of that wealth will go to these heirs who are among the youngest Gen X and the oldest millennials. I am interested to hear from each one of you how this wealth transfer, this younger buyer, is affecting all your respective sectors. So, Mauricio, can we start with you?
Sure. Well, first of all, I just want to, say, that, as Sebastian was talking, one of the things that came to my mind is that every sector is very similar right now. Art, yachts, planes, real estate. It's all very similar. We're all seeing 2019 pricing. Like that seems to be the pricing. Like we've had this, COVID period where it was just fake. It was a fake bubble. It was a fake thing. Like, I think the faster that we start as a world economy and as a world stop looking at COVID and kind of just start looking at that as an anomaly and not make comparisons to COVID, whether it's up or down or markets, like COVID happened, it was a blip, it was whatever, a fourth dimension. Okay. And let's move on from that. And now let's start analyzing, where are our markets compared to 2019, right? And then let's just forget about 2020, 2021, 2022, and let's start talking about, 23, 24, 25, et cetera, et cetera. So I just want to say that. Secondly, I'm going to take advantage to just say thank you for everybody joining and listening in I'm looking at this thing from all over the world, from Cairo, Egypt, from Texas, from Montreal, everywhere else. Thank you all. I hope this is, useful for you guys. Companies are going to have to adapt. The transfer of wealth is real. It's happening. It will create and fuel and in industries. The young generations will take over their wealth. They will start wanting to buy. They will start wanting to do things. They're going to have wealth in their hands that they hadn't had before. As companies grow and as companies innovate, we have the responsibility to change and be able to speak to that new generation and where that wealth is. Right. And so from our perspective, what I see companies doing all around the world, whether it's Sunseeker, Camper Nicholson, Jets, art dealers, the next generation, real estate companies speaking to the next generation, is we've got to learn how to change and how to speak to the next generation. What are they looking for? What do they want? What are those types of things? And I think that evolution is critical, but I do believe that we're going to start seeing a greater need or want. I shouldn't say need, a want, because we're talking about wealth. Nobody needs, another house. Most of these people have five. Okay. It's a want. It's a want of another piece of art. It's a want of this. So how do we attract and become that conversational piece to that next generation? That's the critical piece. And I think that companies need to figure out in order to survive in this next generation as the wealth transfers.
Arushi or Sebastian, do either of you have a response to that?
I'm happy to jump in if I can go here first. I can talk about this actually from a very personal point of view, also from not just me, but also from the clients that I have been catering to. So in terms of wealth transfer, I think the tastes of the generations before us and the generation who the wealth is being transferred to are different as well in terms of aesthetics and art. So I am seeing a lot of the next generation kids of a lot of the art collectors come to me and say that, like, hey, I am probably in the next 5 years going to want to come to you and want to sell these artworks that have been collected by my parents. And I would want to purchase and build my own art collection according to our taste and aesthetics, according to what I think my kids would like, and all of that. So we're going to see, I think, a lot of artworks come onto the market from the contemporary art perspective, and a lot more sales coming into the market from a post-war contemporary artworks perspective, is a general feeling that I'm getting from speaking to clients personally. And I've had this similar conversation with more people than I can count on my fingers, which shows a little bit of indication where I think the market is going to be going into in terms of purchases of artworks and the kind of artworks that are being purchased.
And I know I've read a lot about sort of the younger generation being interested in artists of color or female artists. I'd imagine that is something that's a little different when you look at the younger generation versus their parents.
Absolutely. So, the art world in general was a very male-dominated industry. Whether we look at art dealers, whether we look at artists, whether we look at art collectors, historically it has been very male-dominated, and especially in the last decade, we've seen an exceptional amount of inclusion of artists of color in particular, which has brought their market up by a lot. There are certain artists, of course, within those artists of colors that are exceptions that have done exceptionally well. There's a lot of artists during COVID that came into the market, had a quick rise and a quick death as well. So the market has started booming, and it is an important sector. We are seeing currently a huge surge in people purchasing the Latin X artworks. There's a lot of art fairs like La Pinta that are upholding those artists, and we're also seeing other art fairs that are coming up like Zona Mako, that are also upholding that new sector of artists. Same thing with Southeast Asian. If we look at the Southeast Asian auctions in the last year, they've been doing exceptionally well, better than double-digit growth, better than a lot of other markets. So, of course, artists of color is a huge part of the next generation purchasing art. The female artists specifically, I think, again, I think there's too many underrated female artists. There are the next generation that are starting to look at female artists. We haven't seen the same kind of surge in their markets. I have seen in the $100,000 to $500,000 range, a lot of which would be their primary pricing. A lot of female artists doing very well in secondary, and the new generation of collectors is interested in building collections around female artists specifically to bring them up to par with their male counterparts. I like, there's a lot of I can give you a lot of examples like Kusama and Warhol, right? Warhol is an again, pillar of the contemporary art world. But he took a lot of his inspiration from Kusama when she was also in New York, and like she wasn't given the same kind of dues and same kind of respect until very recently in the last, we're saying, decade, we've seen Kusama come back up to par, but not even up to par to Warhol's, right? Like she's still coming up. So I think that's definitely a big factor of where the tastes of the new generation have shifted and are changing.
Sebastian, anything you wanted to add to that from the secondary?
Yeah, well, I think that's right. I mean, we've just put together a new index called the Emerging 100 Index. And in fact, I was counting through how many were men and how many were women, and it was 47 women to 53 men. Now, that's unprecedented for any index that we've ever had. I mean, and that wasn't because we were trying to balance it out. It was literally based on their value growth. And so that I think that's very telling of what's happening. I mean, I think there's probably many more women collectors as well, and that's going to have an impact as well. But I think in terms of the wealth transfer and the younger collectors, I mean, we've seen over the last few years that the big gallerists and auction houses have been working very hard to try and understand those tastes and to try and bring new artists in. In fact, there's been an explosion of artists born after 1990. And I mean, this is unprecedented. Normally, you would never expect to see an artist in the secondary market until at least mid-career, and for the reasons that you would expect them to be able to build their collector base and also evolve their practice as well. It's not something you do just straight out of college. But I think that the new economic realities are that, and certainly younger collectors coming in at a slightly lower kind of price point, it made sense to try and cater to this market. And so we've seen an explosion, as I say. But it's very difficult for not only for the fact that a lot of these artists are still very young and still learning how to express themselves fully, or at least haven't been through some of the key stages that all artists go through. As an artist, you make discoveries at any point in your life. And so it's difficult to know, which of these artists are going to have the staying power, in terms of who the collectors think really have value. So it's very open at the moment, but I think what it is showing is that the whole idea of younger artists, if we think of it from the artist perspective, who are also looking to make careers, I think there are opportunities for them as well. We've seen an explosion of kawaii style art. That's the Japanese artworks like the Hello Kitty, started with these very sort of big, sort of puppy eyes kind of artworks. Well, interestingly, some of the biggest, the most successful are Spanish artists. Javier Calleja, there's Okukume, Edgar Plans, and they've taken their starting point directly from the 1980s Japanese kawaii, and also the manga and all these sorts of things. So you're getting a kind of international exchange of styles and tastes as well. So it's very interesting. And as I say, it's changing very quickly. So, I think for the younger collectors, I think they do want the transparency. They do want to, I was talking to a gallerist recently. They're very happy to walk into a gallery and say, what do you think is going to be the resale value? Well, that was a question you weren't allowed to ask 20 years ago. You'd be shown the door for bringing commerce and art into the same space. But I mean, that's changed as well. And rightly so, because, if you're going to invest a lot of money, you should be prudent about it. And so why not get the advice?
Absolutely. I wanted to discuss AI. I don't know if it's just in journalism, but I think it's everywhere, that it's what everyone seems to be talking about, what everyone wants to know about. What I'm curious from each of you is how your industries are incorporating AI, but I'm also curious to hear which kind of successes you think they've had. How have they best incorporated AI, and what does the future of AI mean for each of them? So, Mauricio, let's start with you. Oh, you're just on mute.
Yep. By the way, I think it's Mackenzie that keeps putting me on mute. She doesn't want me to talk too much. AI is critical. Those that embrace it will survive. Those that don't embrace it will not. There's no question in my mind about that. The question is, how do you embrace it? How do you use it? AI is not meant to replace humans. It's not meant to replace us. It's meant to enhance us and to make us more efficient, to make us more efficient, more useful, all of those type of things. Real estate, the way we're using it is multiple different things. I think from a marketing perspective, there's a lot of ways to use it. Writing, ChatGPT, really great way to start a draft and get, things going. I'm sure, Lucy, you in your world, that's kind of a, crazy thing. But again, if you sound like a robot and look like a robot, that's no fun either, right? So the big question is like, great, use it. Make sure you use your own research. Make sure you put your own thing and then put your own perspective and your own point of view. But, from our perspective, if we're writing, house descriptions, amazing, great. Where I'd like to see it go from that perspective is to be able to walk into a house and use this, iPhone here and scan the room and scan the house, and then allow that the computer vision, the AI, to tell me the features in the house so that I can become a lot more efficient and I can enter a listing and create a listing input much faster than I'm able to create a listing input today. So I just think there's, lots of really fun usages from throughout real estate. When I look at real estate, I don't only look at, I look at brokerage, I look at marketing, I look at investing. I think AI will help architects become, become, more efficient space. Okay. I hope it will not take away their creativity. It'll certainly not take away, a Richard Neutra or a Frank Lloyd Wright's creativity, where you still need to feel that, but what made them incredible was also the understanding of space and how do you use space, right? And then, one of the reasons we launched the Agency Art House is now, from a lifestyles perspective, how do we fill the space with beautiful art? Right, so that you create a sanctuary for yourself to live in. And I think that that's what that's giving us. I see AI giving us more time and improving our lifestyle. Okay, if AI can make a 4-day work week and we can work and we can have the efficiencies of a 6-day work week, fantastic. I am not suggesting that I think that people should become lazy. I certainly hope that that's not where it goes, and I certainly hope where it doesn't, the side effects are not, having our kids not knowing what they're doing and they're literally just passing school and passing grades just because they're using AI, to get through school, right? Like, I hope that what it does is enhance us to think differently, to think in another dimension, to think further, to push us further. And I know that that's where it's going. There'll be the side effects of the young adults and the young kids that do not go that way. But for the most part, I'm very excited about AI, and I'm very excited to incorporate it into the agency and into our daily life and to the way we use it. And I think we need to. You cannot fight it. It's here. It's here to stay. And if you want to be a company that succeeds and survives against your competitors, you need to embrace it.
Agreed. It also seems like from a real estate perspective, it's a great way to go through data and to sort of learn more about different areas or just kind of get a deep dive into some numbers that, as it says in the report, it never replaces a good agent, but it can be part of the toolbox, I would assume.
100%, and it should be part of our toolbox.
Arushi or Sebastian, any thoughts?
Absolutely. So I am 100% with Mauricio on this. I think in the art world, AI is being used as a tool. Um, Anyone who is using AI not as a tool and as a replacement to human creativity is massively failing. And we're looking at that we're definitely looking at this trend happening. I mean, there are some AI artists that have taken photographs and taken the artworks that they've created and derived, taken the AI technology like Rafiq Anadol and made these beautiful machine hallucinations that's a bridge to the traditional art world, crypto world, and AI. But I read something very interesting by in an interview yesterday, actually, by Takashi Murakami. Everyone knows Murakami. He's very popular. He had a Louis Vuitton collaboration, and that's coming up again, from my understanding. Again, represented by Gagosian, the #1 gallery in the world. And I was reading about his new paintings that are inspired by traditional Japanese artworks. And he was explaining how he used AI as a tool. So a lot of these paintings are in museums, and it takes a long time to trace all of the original characters. And what he did was he used AI as a tool where he took images of these and inputted all of the images into AI, and AI gave his team a lot of traces. Again, AI is not a replacement for human creativity. And the best example of this is he said, when I got the traces, a lot of them were accurate, a lot of them were not accurate. So I had to go in and from like him and his team had to go in from a personal perspective and change those traditional Japanese characters to Murakami's traditional Japanese characters. So the artwork is still very unique. He is using these AI tools to put together a whole new body of work. Whenever someone says that, like, there's robots that are painting and stuff like that, almost every time it seems like a little bit of a marketing gimmick, and none of them have lost it in terms of it being an alternative investment or it being it having longevity in the art world. So I think for artists, what they need to be doing is research, and this is, again, we're in the beginning stages of AI. So research how you can use these tools and enhance your practice while using these tools. I mean, you have new paintbrushes, you have like a lot of new colors, new technology of colors. A good example is like revolutionary. Like if you look at the art world's revolution, first it was oils, and then like acrylics came along a lot later and stuff like that. So there's always a revolution that is, or rather evolution that like happens. So like use this AI, this new entrance into AI as a tool that's going to help you. And then my advice to art advisors. So my colleagues, my counterparts, people who work at the agency art house is exactly the same. We need to do a lot of research. Like I said before, that like it is our responsibility and it is expected from the new art advisors to give as much information and be as transparent as we can. And whenever you dwell into an artist market, there's a lot of research to do. You have to look at artist trajectories. You're going to look at comps. You're going to look at their initial practice, how their practice changed. You have to read about a lot of things. And AI is a fantastic tool to put very specific questions that like your client might have and anticipate those, and get all of those information in very precise terms. The other part of it is that like, when you're giving descriptions, we're not journalists, we're art advisors. We're not critics. So we're not as good as eloquently and clearly explaining artworks often. And for me personally, AI has been absolutely amazing. I use ChatGPT all the time to put together what I want to say, and I have them enhance and rephrase it in a more easier manner. Because again, like from someone who's so indulged in the art world, I'm often using words that other people don't understand, right? To me, it's so normal because that's my world to use. But when I put it in AI and I ask it to rephrase it in a simpler manner, it often gives me the same description in layman terms that my clients and collectors are more likely to understand. And it's been massively helpful for me. So I think like using AI as a tool in the art world is what the future is going towards. Using AI as a replacement for human beings is not possible. And no matter how advanced AI gets, we are also getting more advanced accordingly, right? We're also shifting. So like, I don't think that's ever going to happen.
Yeah, yeah, agreed. I think it's so similar to the real estate market too. There's a question in here that Don asks about the $6 million banana. Let's just briefly sort of tackle that. For those who don't know, I believe it was at a Art Basel 2019 or something where this banana first, it's called Comedian, I think, right?
Correct.
Uh,
Edition of six Maurizio Catalan Comedian that was sold for $120,000.
right. And it's literally a banana duct taped to the wall. Um,
Um,
and and it just sold at Sotheby's for six and change
6.2
million.
million.
Sebastian Arushi, any thoughts on that
Well,
particular?
I think it's very telling who bought it. I mean, it was Justin Sen who's obviously the crypto king, and the whole idea. It is an idea. It's conceptual art, obviously, and so it's sort of thematically goes well with what he's doing in the crypto world. So I mean, you can see. Certainly, he could see it as a marketing thing, and he was allowed to pay in cryptocurrency, which since Donald Trump got elected, I saw has skyrocketed. So I think perhaps it wasn't quite as expensive to him. But nevertheless, it is a lot. But it's like a lot of this is sort of flexing, isn't it? I mean, I think for him it was probably good that it was so expensive because then it hit the headlines.
Yeah, for sure.
Well, I will say, so the banana, and I've actually spoken to Mauricio at length about this several times as well. So um, the banana it is a conceptual artwork, but as far as Maurizio Catalan's practice goes, it's not the most expensive artwork of Maurizio Catalan sold whatsoever. His auction record about a decade ago was 17 million. And then he also did another very cool artwork, which was a gold toilet made out of solid gold that was in the museum that was stolen, that was estimated to be around 10 million. Maurizio Catalan is an art world prankster, and he is talking about marketing in his artwork. The huge part of this banana was, and the concept here was like something as mundane as duct tape and a banana can be considered a luxury for depending on how it is marketed. The way I have explained this concept to my clients, and again, it is a conceptual artwork, and you are buying the concept of the artwork is when you look at a human being, right? You're looking at your friends, you're looking at your family, you're looking at me, you're looking at all of our panelists here. Are you evaluating me based on the value of my t-shirt and my jacket and what watch I'm wearing and what the total net worth of me is on that particular day? Or are you looking at my potential, my ambition, what I've done at work, what I'm about to do at work, what I'm creating around me? Like when you evaluate a human being and you judge a human being, you're judging the human being way more based on way more than just what they're wearing and what the exact valuation of things are. So that the value of the banana is not just the value of the banana, it's the thought process that it's brought on, and why it went from $120,000 to however much it went up is because the marketing around it worked, right? It sparked conversation. And I mean, who bought it again? The person who bought it, who was a crypto guy. I mean, I think that's great too, because the art world traditionally has had high barriers to entry for people to be purchasing artworks, and the tech industry was not given the same access to these top blue chip artworks for a really long time. And I feel like because he did that, and for whatever reason, for marketing and all of these things that he did that, he is bridging a gap where the tech people are interested in buying more physical artworks, however he paid for it. And another last thing is the banana, again, being a conceptual artwork, there's 6 editions of it. It's the third time it was officially eaten in the mass media and public, but the artwork has a stipulation where the banana can be replaced every couple of days with a new banana. Again, conceptual artwork, you're not having the 2019 banana whatsoever. It was probably recently replaced and eaten. So there's a lot of different things in conversation, and this kind of goes on what is art, right? There are a lot of conceptual artists. There are sculptures, there are paintings. So this is just another genre of art, and it did get a lot of publicity. And because it got a lot of publicity, the valuation of it increased, and it did speak about materialism. It did speak about marketing. It did speak about a lot of different concepts in our world, and that's what made the banana what it is, and that's why we're all talking about it.
Yeah, I think that's really interesting. I love that explanation of it. So we're going to wrap up in just a minute, but I want to let each of our panelists just take out their crystal balls and let us know what sort of you're anticipating in terms of the global luxury market in 2025. What are you expecting? What are you most excited to see? What are your thoughts for the coming year? Mauricio, let's start with you.
Yeah, I'm excited for 2025. I'm expecting to see confidence in the markets. I'm expecting to see a administration that starts becoming aggressive. Trump's cabinet right now is super strong. We've been in a down cycle now for 2.5 years. And generally speaking, you just have these cycles, right? You have a pumped up demand. People have been sitting around. There's plenty of cash in the market. There's plenty of cash sitting in bonds. There's plenty of cash sitting at, in a lot of different places. I expect the Fed to start lowering some rates. I expect there to be some excitement in the markets. In the event that, people get, start investing into the stock market, you're going to start seeing bonds go down, and money coming out of bonds, which will fuel the lowering of interest rates, which I think would be fantastic, for the industry. And we've just been in a pent-up demand. And hopefully, one of the critical pieces that it's a little bit difficult to understand, and it's in our red paper. And guys, like, you should read our red paper. It's amazing. Like, all of these collaborators put so much effort into this thing. I've read it. It's incredible. We talk about the supply and demand situation, and I think that is one of the pieces, particularly when I'm just talking about real estate, that could affect, everything I'm saying about the resurgence and the beginning of the uptick of real estate. We need to see more affordability in real estate. Okay, there's nothing wrong with that. And when I'm talking about that, I should say more of value. I said affordability earlier. We need to see more value in real estate. We need to see a little bit of a depreciation in pricing. We need to see sellers accept 2019 pricing. Okay, they're doing it. We need to see more of it. But if we don't unlock supply, we're not going to see that enough, and the prices will stay high and the inflation will stay high. And that would not be good for the long-term sustainability of the economy and for the markets. We need to get through that COVID time. We need to erase it from our history, and we need to start getting back into regular, normal cycles of life, and of the economy. And I'm excited for 2025. My outlook's high. I'm excited for it. And yeah, I'm just looking forward to having a good time too.
That sounds great. Sebastian and Arushi, anything you wanted to add?
Yes, I mean, I think that going ahead, I think, yes, there are opportunities now. I think that the opportunities people are taking, though, are in the sort of the blue chip and the more established sectors. They want really the best of the best. We've seen, say, if you take handbags, for example, we've seen, people are interested in the newest bags coming with the latest trends. But also they're sticking very much to the top brands, so Hermes and some of their classic bags, the Birkins doing well. And so people are either looking for something that speaks to them, or they're going to stick with something that is so tried and tested that it's already proven. I think in the sort of the newer sectors, because things have to evolve. I mean, I think the thing about the blue chip, of course, is that it's a sort of economy in itself, really. These are currencies, some of these artworks. And so certainly where you have artists with large, who are very prolific and produce a lot of artworks, you're going to have a market for those. And I think looking forward, I think this was something about AI as well. People are going to use AI to not control their output, but to enhance the way they produce art. You do need to, have a large body of work if you expect to, develop a market as an artist. And I think, those changes are going to be interesting. But I think that people are going to be, in terms of newer artists, newer luxury, people want the good stories around them. They need the narratives that go around them. They need to feel that it's more than just buying the art. So that's what I would look out for.
Great. Arushi, you want to finish us out?
For sure. So I do think, again, we are looking at a very optimistic time coming up in the next year and in the next couple of years. I think right now we are in a sweet spot where from now to, I would even predict, if I had to, for the next 6-ish months, is going to be a really good time to get into buying art, and a time where competition is not the highest and you can get A+ works for a good price. I think after the next couple of months, and as the economy starts getting better, we will see that there is a lot more competition to get those artworks. And like I said, that the incremental value that you can gain from it is going to be decreasing as we reach the epitome of the market. So I am seeing an upward moving graph, and I am hoping that it keeps moving upwards for the next couple of years. And we are in that cycle in the next couple of years. I think something very similar to real estate, what Mauricio said was that people need to understand what the 2019 pricing is and how the market has adjusted and shifted, and not compare themselves to what they could have gotten during COVID periods, because that time has passed. It was an abnormality in the market. And I think a lot of sellers are particularly right now upset and struggling with the fact that they didn't cash out at the top of it, but such is life, right? And you have to understand where the market is going right now. Again, I think right now people should be focused on buying. And the seller's market will come too in a couple of years. And that's when people should start focusing on selling those artworks again, and where they'll get a lot of, like the sellers will get a lot of value for their artwork. So again, everything goes in cycles, but that's what I would say.
Excellent. All right. Well, thank you, everyone. This was a great conversation. Be sure to check out the report at theagencyredpaper.com. They make it nice and easy for you. It's all there. But thanks again to everyone for joining us, and to our amazing panelists for teaching us so much. Have a great rest of the day, everyone.
Arushi, Sebastian, thank you guys so much. Really
Thank
appreciate
you.
your time. Lucy, you were
Thank
amazing.
you. Thank you.
Bye-bye.
Thanks.